The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Treasure hunters, welcome to the January 28th, wonderful Wednesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a great start of your day. It is Hump Day. I love that commercial, that Hump Day commercial out there. Hope you've seen that. The two camels in the park out there. Kind of a cute commercial. In any event, hey, we're going to see some cute commercials this weekend. I suppose we are, right? It's Super Bowl weekend out there. So hope that you're off to a great start of your day. Let's make sure that you and I, we do everything in our power to have an extraordinary day. I'll do everything I can in my power to provide you with an extraordinary show. Of course, let's always remember what's talked about is a dream. What's envisioned, that's darn right exciting. Of course, what's planned becomes possible, but what's scheduled is real. And I really want to thank you for spending your time with me. I am absolutely here to serve you. Feel free to call in at 877-927-6648. Internationally, you can reach out at 727-445-1044. Remember, if you've got a question, hey, pretty good chance somebody else has got that same question. So go ahead, call in for somebody else. A random act of kindness. That's the way to kickstart your wonderful Wednesday. Of course, this is TFNN. I'm Steve Rhodes. Welcome to the show. Dow is up 87 points right now, trading out at 17,475. S&P is up 11 points, trading at 2040. NASDAQ composite up 47 points, trading at 4728. Russell 2000 taking a breather today. It is flat, trading at 1194. DAX is up 86 points. FTSE up 2 points out here. Gold's down $5. Silver's flat. Light sweet crude is off $1.29. Lead the charge, the upside. Biomed. Biomed. It's up a nice 29%, up $11. Apple up with some good volume, 47 million shares. It's trading at 117.70. It's going after its swing point with volume. Something to think about. Tupperware, TUP, up 12% this morning. Buffalo Wild Wings preparing for Super Bowl Sunday. That's up a nice 4%. Freescale Semiconductor up 25%. Boeing up 4%. Western Digital up 5%. Electronic Arts up 11%. Whirlpool up 4%. To the downside, Netflix off $5. Really not a big deal in the case of Netflix. Pioneer Natural Resources, she's down $5. VMware down $4. Open Text up $4. Ethan Allen Interiors down $3.70. Again, our call number 877-927-6648. Let's kick things off. Let's go take a look at the ETF structures for the indices out here. If we take a look at the Dow Diamonds, up 84 cents a million shares so far today. What did the Dow Diamonds do yesterday? The Dow got into the December 16th swing point with what? Well, the volume there was 12.2 million shares. It got into it with 11.5 million shares. For a day when things should have just totally busted apart, it still got into that swing point with light volume. It's been down to that swing point with light volume. It did 10 million shares on January 6th. It did 11 million shares on January 14th. It did 9 million shares on the 15th. It did 8 million shares on the 16th. It tested it with 7 million shares on the 20th. 6.2 million shares. If ever there was a day for things to just absolutely blow apart, fall apart, I would have to say yesterday would have been that day. Is that what happened? No. And what kind of volume? Similar, but still lighter volume than the swing point here from December the 16th out there. There's just not enough sellers in here. All we're seeing is a consolidation pattern that's basically been in play since October 30th. I remember doing the show over in Clearwater on October 31st. Went over there for a little trick-or-treating. And I remember doing the show, and that was after the finance ministers, Japanese finance ministers, they said, hey, we're going to go ahead and print. We're going to go ahead and reallocate the monies that are in our pension funds out here and do some foreign investments. And I was at that stage. Of course, you know that I was calling for a market bottom, a significant market bottom back in October. That came to fruition. And it was after that October 31st to say the market ought to consolidate here. How prophetic is that? It's basically been consolidating from the highs of December. You know, we can say, okay, the highs of December 29th, December 5th out there. And this is the Dow. This is the diamonds, you know, and the 170-ish area, which gets you back into that October 30th, October 31st level. So the Dow diamonds, even with all of the damage that should have and was done yesterday, price-wise, volume-wise, not so much. You know, it should have been way more than the volume on December 16th, for goodness sakes. That was 12 million shares, the downside. That wasn't the case. Now, you know, is today going to be a close above 174.39? Is it going to be with light volume? So far, 1 million shares. Could be. Another test of that area on light volume. If you can't bust them down, what happens? You try to bust them up. And that is likely the case inside of the Dow diamonds. If we take a look at the SPYs, let's go see what the SPYs were doing now. In the case of the SPYs, hey, look, we know that they broke through this descending price channel. It came back and it tested it yesterday. It's back outside of it. But what else was the SPY doing yesterday? It was testing December 16th. The swing point there had 259 million shares. What did it test it with yesterday? 134 million shares. Now, look, I'm not that great at math, but I know if I double 130 million, I get to about 260. In this case here, it'd be 268 versus 259. Are you kidding me? 50% lighter volume out here? There's no selling to speak of that's going on. Yes, this has been a frustrating, choppy market for many that don't realize that most Januaries are like this. Most Januaries see the market move down into basically January 29th. Today's the 28th out there. On average, over 82 years, the market makes a low on January 29th. That means in this calendar year, January 29th, as I take a look at trading sessions out there. You know, is tomorrow the low? Here's what we know for sure. The SPYs have rejected the swing point from December 16th yesterday with lighter volume. If there was ever a day to go ahead and take the markets apart, it would have been yesterday. If ever there was a day for follow-through, it would have been today. The overseas markets, the folks over in Asia, they must have been looking at this and saying, hey, there wasn't any volume down at that swing point from December the 16th out there, and that's the case. So, you know, if you can't bust it down, is it going to go ahead and try and bust it up and move up into that swing point from December 26th, December 29th, and the 209 area, 208-ish area? Yeah, probably that is the case out there, and that's inside the SPYs. If we go take a look at the QQQ ETF, the Qs, what did they do? They broke out of that descending price channel out here yesterday, came back, basically tested it. In the case of the Qs a little different story. 51 million shares at its, 35 million shares at its swing point, which it didn't touch yesterday. That was from January 16th. Volume yesterday was 45 million shares. That 45 million shares, though, what it was really also going against, if we just simply use as our benchmark December 16th, that had volume of 65 million shares. What did it do yesterday? 45 million shares. There is selling. There's just choppiness. There's choppiness out here. That's it. You know that to be the case. But with regard to selling pressure, it's just not there to the downside. It has not fallen apart. Yesterday should have been the day. Today should have been the follow-through. That is not the case. That's inside of the Qs. Inside of the IWM, not impacted yesterday by Microsoft because Microsoft's not a part of the small caps out here. Nonetheless, what did the and so therefore no real damage inside of the Russell 2000, inside of the IWM. It's not doing much as we speak here right now, but of course the IWM, shoot, this thing's been on a consolidation pattern on all types of time frames for 14, 15 months probably now that we're going on. Nonetheless, what we do know is that it did break through its descending price channel. Did that here 2 days ago, confirmed that move again yesterday. Now just kind of a sideway-ish type move out here. In the case of the Russell 2000, it had already tested the December 16th low. That had 62 million shares. It was tested with 67. Still never got down and broke it. That was on January 6th. Tested with 46 on the 15th, and then up and out of there with 41 million shares on January 16th. So that December 16th area across the board, the diamonds, the Qs, the SPYs, the IWM continues to be tested, but not with volume. Now, could that happen? Could that change at 10:16? Absolutely. There's not anything I can do to control what's going to happen in the next minute. What we can do is take a look at what it has been doing, and what it has been doing has been pounding down with light volume across the board out here. What today holds, I don't know. There are some numbers actually that we took a look at during the first hour of the show that would kind of be our line of demarcation to the upside, as well as if it can't take that out, what we'd be looking at to the downside inside of the market. So that's what's going on inside of the ETF structures inside of the four major indices. Let's take a look at what's going on a little bit further inside of the ETF structures for the sectors, or some of the sectors of the S&P 500. Let's take a look at the XLK. The XLK, that's up 71 cents this morning. What was the XLK doing yesterday? Well, again, here's the breakout, October 30th. That's one level that you could be taking a look at. That's got about 10 million shares. Of course, December 16th out here, that's got 15 million shares. If we use December 16th as our benchmark, 15 million shares. Yesterday's pushed lower. Just under 11 million shares. Again, not enough to really bust out the lows out here. The test before that was 18 million shares. And that was on January 16th. January 16th had more volume than yesterday inside of the XLK. And at this stage of the game, price has gotten above that high from January 16th, which is 40.42 out here. Just a sideways consolidation going on inside the XLK between the 42 level and the 30 and the $40 level. So you got about a little over $2.50, about $2.50 or so consolidation going on inside of that ETF. If we take a look at the XLF, she's flat today. If we take a look at it, what we know about the XLF is that a nice sign of strength on January 22nd. 79 million shares, pulled back the next day, 27, pulled that the next day, 22, pulled back yesterday, only 28 million shares. It's pulling back on light volume into where it broke out of. So the XLF, if we would take a look at, does it have a December 16th swing point? It's below the December 16th swing point out here, 36 million. Nonetheless, it had a sign of strength. That's what we'll use as a benchmark to take a look at the pullbacks that are going on as we speak right now. Let's look at the XLY. The XLY, I got to go back, take a look at the XLV. I'm kind of getting out of order here, one by one going down on my screen. If we take a look at the XLV, strong like bull. The XLV been trying to take out its highs in the 71.43 level. That swing point from December 8th has got 5.9 million shares. It got up there with 11 million shares on January 22nd. It got up there with 8 million shares. That was back on January 26th. Yesterday, 10 million shares. So it keeps pushing into that high. It's trying to take that out. That'll set up a big A to B equals C to the upside. Now, this is important because the healthcare sector out here is a large weighting inside the S&P 500. If the 71.43 level gets taken out, you're looking at A to B equals C to. That would take into the $79 to $83 area. That is on the XLV. If we take a look at the what's next? XLV, XLE, energy sector. That's under a little bit of pain here this morning. Not to be unexpected with light sweet crude back $1.35, trading out at 44.88. If we take a look at the energy sector out here, the energy sector clearly in a descending price channel. It's been in this price channel in essence since August 29th, 2014. It's got quite a bit of work in order to really be able to break its trend. Nonetheless, it has tested what was its swing point from December 16th, which had 57 million shares. It tested it with 52 million shares, and then came off with a little sign of strength. Little sign of strength is what I say on January 16th. That was with 41 million shares. So pulling back this morning to about 7.2 million shares out here. Still struggling, but trying to form some type of bottom. It did also, as I say, test that December 16th area. This is Steve Rhodes. This is TFNN. Dow's up 51, S&P up 7. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 69. Hey, 777. That's what the S&P was flashing right there. Oh, those sound like some pretty lucky numbers out there. The composite, it's up 38 points. Russell 2000's off a buck. We were looking at the different sectors within inside the S&P 500. I think we might have finished off at the XLE. Let's go take a look at the XLY, the consumer discretionary area. Now, in the consumer discretionary area, this thing also tested its December 16th swing point. That had 9.1 million shares. It tested it with 9.5 on January 16th. Yesterday, it never got down to test that. This is really just consolidating also at the highs. Of course, you would expect that with the SPYs, the diamonds, in essence, really doing the same thing out here, but no damage really to speak of. If you take a look at the XLP, the consumer staples, that did get down yesterday to test a swing point. It was not December 16th, never got down that low. It got down to test January 14th. That had 13 million shares. And yesterday's test with us on 10 million shares. So really across the board, sector by sector, Of course, because we saw it inside the S&P 500, the SPY, I should say, you're looking at a test of basically on 50% lighter volume yesterday versus what that swing point has. So it's just not there. It's not there as of 10:25 a.m. on Wednesday, January 28th. Maybe at 10:26 it's there, but it's not there as we speak right now. Now, let's go take a look at the currency market. Let's go see what we've got going on out here. Let's take a look at the euro. And let's go switch down and take a look at the euro on a short-term chart. Let's look at let's put a 10-minute chart. That might be too short-term to squeeze all the data in. So there's your A to B equals CD that completed here. It was a 1 to 1.272 yesterday. That really hit our target area. Now we've got the looks like perhaps an A to B equals CD to the downside price projection out here. Let me see what that would actually take us to. So your A point's going to be from yesterday's high. That's at price point of 1.14225. And your B point, let's see here, what do we want to do? We'll just come all the way down here. That's what we'll do. Your C point out here at about 120 or so this morning. So it looks like the euro maybe has just a tad more to run to the downside. Price is, with price being below the B point, being below the 1.1327 area, pretty good chance that we should see the euro move down. This will put a little bit of strength inside of the U.S. dollar index. Should move down to a price objective of about 1.1286 or so, somewhere right around there. The key is going to be, because that could then set up your Gartley buy pattern. And if we take a look at retracements now, go from the low to the high, and it gets a 10-minute chart that we're looking at. The 0.618 retracement of that entire move gets you into the 112.98 level. So between 112.98, which we were almost there, and just slightly below that, maybe about 112.86 or so, that would set up a Gartley buy pattern inside of the euro. So that's really going to get a real release of information if we are beginning to see a change in trend out here. That's really going to be this first pullback that could set up a Gartley buy pattern. That's on the 10-minute chart for the euro US dollar. Let's take a look at the Great British Pound. Let's go see what it is doing out here. I'll leave this on a 10-minute chart here as well. Now, in the case of the Great British Pound, let me pull this back further here. This too, let's put this on a different time frame because this was trying to bottom out sooner. So let's take a look at it again. We're looking at short-term time frames. We're looking at a 30-minute time frame out here. But we do see a series of A to B equals CD patterns. Let's go draw a couple of those in. Your A point all the way down here back on January 23rd. Your B point also on January 23rd. Your C point on January 25th out there. Well, let me do this here. Well, it makes in this case here, it made basically the 1 to 1.618 A to B equals CD, pulls back a bit. So there could be a larger A to B equals CD pattern that it's trying to actually form out here. That here, we'll use the same A point out here, but as the B point now, we're going to go ahead and use this high out here from looks like about January 27th, and just a short retracement, about an hour's worth of retracement. Well, there's the second A to B equals C to the upside. So it hit that price objective, which was in the 152 range. It actually got up to a high of 1.5224. Pull back as we speak right now. That looks pretty good. So on the shorter term time frame, let's change this now to the daily. The Great British Pound is certainly forming a couple of A to B equals CD patterns. Now, we went down to the short term time frame, we were able to see that out here. You wouldn't see that on the daily time frame. Now, let's look at some trend lines inside of the Great British Pound. So it's got some trend lines that it's trying to contend with out here. Let me get rid of the larger A to B equals CD pattern. And we're going to come from the trend line, the high from July 15th out there. Let me do that before we get into the breakout here. So there's our trend line. It's a real good trend line, I would have to say, inside of the Great British Pound. So a real breakout. Right now, it's nothing more than a counter trend rally. It can change that by breaking through that green line on my chart, around the 153-ish type area. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up about 40, S&P's up 4, Composites up 25 points as we speak right now. So we took a look at the currencies. We haven't looked at the metals or the commodity markets. Let's just take a look at gold, silver, light sweet crude. Let's start off. Let's look at black gold, Texas tea out here, light sweet crude. What do we know about light sweet crude? Light sweet crude right now, has been trying to form a bottom out here, but doesn't look like that is really in the cards. What it's really just simply been doing is working off. Look at this sideways movement down here. at these lows, been working off a sideways condition. So trading at about the 44.91 level as we speak right now. Again, in the case of light sweet crude, it's actually easier. It's easier for me for us to go back and take a look at the longer term, the continuous contract. So we'll put that up on our screen. That's what's going to show us the $37-ish area is where it likely is headed to. That's already back into the January 2009 swing point out there, the number 3320, and you're trading inside that swing point as we speak right now. So in order for light sweet crude to really say that it wants to change a trend and rally, it needs to get above $50.47. That's the monthly swing point from back in January. So long as it trades in there, that actually says, hey, 3320 is the number. Now, let me put this on a weekly chart. Let me see if that's also the weekly swing point. See if I can come back that far. Is that it is not. So the actual 3320, that comes in right here. That was the week that began January 12, 2009. So let's put a line across the chart out here. We'll make that one we'll make that a yellow line. So let's I'll try to keep this on our on my charts out here, as long as I don't lose it, meaning I accidentally close it out, which I tend to do on the show here from time to time, which really makes me upset because I lose all the work that I had done previously. So 40.80 is the number there. That's on the weekly chart, and you're trading. So it looks like 40.80 becomes the next target level. So if we're just using swing points, which we are, you've got the light sweet crude trading into the monthly swing point. Back in 2009, the weekly swing point, the top of which is 40.80. I might as well put the low out here as well, that $30 level, so then I don't have to look at that. So that's at 33.20. And let me see if we can go to take a look at the daily. So see if I can pull this back into 2009. This will take just a few more moments to do this and pull this back. We'll make that a red line out there, and that way we can use that as our gauge. So January 2009, there we are. So the daily, okay, great. So now we've got them all. So the daily actual swing point was on the trading session of January 15, 2009. So that is at a price point of $37.99. Now, of course, I'm going to have to remember what the colors are. So I'm going to have to put a key out there. Maybe I'll just simply do that at this point. So let's go change this first. We'll make that the red line. So there's our red line drawn in the sand, or at least light sweet crude's red line, using the continuous contract out here to help us guide prices. So now let me get all the way back. I think I'll do that real quickly here. And so let me go ahead and move this up if I can just a bit. So there's our numbers that we're looking at. So in the case of light sweet crude, 40.80 becomes your next potential. So when we're taking a look at bottoms, this is assuming that we see the low of January 13th get taken out, 44.20. If we see 44.20 get taken out, then I suggest that it cycles down into the 40.80 level. Now, the reason I use that is I like to use that seventh inning stretch pattern out here. If we take a look at light sweet crude, what I have on it as we speak right now, I'll blow this up on my screen here. I've got this down making that price relative strength divergent pattern. That was on January 13th. A seventh inning stretch pattern, that's that wave G to the downside out there. And if, in fact, light sweet crude just simply takes out that low, it says everything really begins to recycle again. And I could recycle it right from this right here, this trading session from January 15th. And it says it's got several more waves to the downside before it hits bottom. And that would then say to me the next area to be looking at inside of light sweet crude would take you down into 40.80. That, again, was the yellow line. That was the weekly, right? So let me just put this up here right now. So I got yellow. Yellow is weekly. And the red line was the daily out there, swing points, the swing point high, because we know the swing point low for the most part, HIGH. There we go. Okay, good. That should work. Okay, I'll come back and I'll redo that. So that's light sweet crude. Excuse me, didn't mean to spit across the screen there. Hopefully Al didn't catch that. Now let's go take a look at gold. Let's go see what gold is doing. Let's come back, take a look at the current contract. So in the case of gold, what's interesting here is you got the U.S. dollar index up 390 ticks as we speak right now. Gold is back $5. It's trading out at 12.86. Gold's just kind of been hovering around these highs out here. A couple of one reversal signal back on January 23rd. A little bit of follow through on the 26th. Yesterday was just simply a sideways just type move, and so is it today. I'm expecting that what we actually see now, I don't know how much higher, I don't know, but I'm expecting that the way that gold looks to be playing out and the way that it's playing out with regard to what the large commercial traders are doing, it looks to me more likely that what gold is doing is getting ready to move higher into February 3rd. Now, it's the 28th, so February 3rd is just around the corner. When is that? February 3rd is Tuesday. So I'm anticipating that for whatever the reasons are, that we see gold move up into February 3rd out there. And that's the full moon day. And then if that happens, we are not guaranteed, but then we're likely to see actually a move down inside of gold. That's how things seem to be setting up as we speak right now, even in the face of, let's say, the euro moving higher, the U.S. dollar moving back. That still would look like the setup for me, and that's in the case of Goldilocks. With regard to silver, well, silver would really be doing the same kind of move out there. Silver right now trading out at $18.10 as we speak. Now, the case of silver, it's run, it's 1 to 1 A to B equals CD, gets you up to 18.71. So far, the highs that we've seen have been about $18.50. Has been $18.50, but silver could actually run up to about $19.50, another dollar. I don't know that it's going to do that, but I would expect that the two would go hand in hand in tandem. Now, what's interesting here is that that's what's likely going on inside of the actual physical metal out there. If we take a look at what's going on inside of the mining sector, if we look at the XAU becomes really bullish again if it can take out this key reversal session. And yesterday was an attempt to do that. That's a trading session from January 21st, and that is its level of resistance out here. That high is $83.22 out there. If it can get above that, then you're looking at a move to about $85.75. Inside of that's the XAU that we're looking at. If we go take a look at a couple of mining equities, let's go take a look at Randgold Resources. GOLD is the ticker symbol. Randgold Resources, it's up above. It's 1 to 1.618. A to B equals CD. I don't see any reason for Randgold Resources at this stage not try to make a run for 87.83. That's its next level. That's the 1 to 2 A to B equals CD. Oftentimes, when you make a 1 to 2 A to B equals CD, that's kind of the extent or the end of the move out there. So that's what's going on inside of Randgold Resource. Let's look at Gold Corp out here. GG is the ticker symbol. That's down about 40 cents with 2.4 million shares out here. It too had a key reversal session that was on the trading day of January 21st. So resistance, pièce de résistance, is even Steven. It's a round number high. $25 was the high on January 21st. Any close above that, we pulled back on here on Gold Corp. We then just take a look at retracement levels. That's from the high. I'd look at it from the high of August the 14th down to a low that came in down here on October 31st. Oops, didn't mean to pull that away. And that would say if it can get above that $25 level, you're looking at a move to about $26.95 out there. That is on Gold Corp. We didn't look at natural gas. Let's look at natural gas right now. The March contract trading out at $2.85. Natural gas is in fact trying to form a bit of a bottom. If it follows the seasonal pattern, it should find, whereas gold is set to perhaps find a high on the new moon on February 2nd, February 3rd out there, natural gas could easily find a bottom, not because of the full moon or anything, just simply because of its seasonal pattern right here in the early part of February. So, which I'll call probably February 3rd out there. And then we see a bit of a move higher, a nice move higher, potentially if it follows the same seasonal pattern. But that high is really only into about the February, we'll call February 25th. So, so that would be the pattern. And then another pullback back to really test the lows that we're at right now. That's a seasonal pattern that is in play out here, and it looks to me like that is at its potential. So I'd be watching for that over the early part of next week, Monday, Tuesday, Wednesday, as a type of time frame. So we've got the Dow now. The Dow is up 5 points, so it's given back its early gains. The S&P is flat. The NASDAQ Composite is up 12 points. Russell 2000 is back up 5. Let's go check in on Apple. Apple here not being able to hold up the market altogether. If we do take a look at Apple, it's into the swing point, which is 117.45. It has hit that level. That has 68 million shares, and you've done 65 million shares already. So unless Apple just totally sells off here, Apple is moving into a swing point with volume. It'll be back up, and it'll go ahead and likely test those highs at 119.75. You're trading at 116.83 as we speak right now. Let's take a look at a couple other stocks here as well. Let's go take a look at Tupperware. TUP is the ticker symbol. They were out with numbers. They had revenues, net income of $82 million versus $89, and sales of $679 million versus $717. So they did not beat the sales number. They did not beat the net income number, but nonetheless, this thing gapped higher, and they must have some pretty good guidance out here. If we take a look at it, it gapped higher. It's got a little shooting star candle as we speak right now, but moving into a level of supply that took place inside of Tupperware, and that was on October the 22nd. That had 3.7 million shares on that downdraft so far this morning, though. We've only been trading for an hour and 15 minutes, and it gapped up with 1.4 million shares. No idea. Well, let me just see what kind of volume. Did it all come in at one time inside of Tupperware? Look at a 10-minute chart out here for Tupperware. No, volume came in over the 10-minute time frame. It's not been too bad. The pullback actually inside Tupperware on 10-minute chart here has been on light volume. Nonetheless, it's got a significant resistance area, and that is right here where this thing began to break down, and that was at the high from October 22nd, and that is at a price point, well, I would put it up there if it would fit, if it would work. That's at 69.81. TUP is a ticker symbol there. If we look at Boeing, let's go see what's going on inside of Boeing. BA is the ticker symbol, up 4.5%, up $5.75. Let's go see what Boeing is doing. So gapping up this morning, up above its most recent swing point highs. Doesn't look like a 52-week high or anything. That was from January 22nd. That had 4.9 million shares. You've done 4.4 million shares already today. Boeing looks like it is a high. Okay, well, let's go see what it's actually doing out here. Let me get rid of a couple things. So now that we pulled it back further, we have a little bit clearer idea of what Boeing is doing. So Boeing is trading into, it's tested its swing point high from June the 9th. Now, that only had volume of 2.5 million shares. Hey, how about this for Boeing? So Boeing is trying to take that out. That was at least a 52-week high. Let me see if it was an all-time high. Let's put Boeing on a monthly chart here just for a moment. While that's going on, I'm going to take a swig of water. No, it's not its all-time high. No. I take that back. Its all-time high is right here. That's from January 2014. It's a monthly chart, and that's at a price point of $144.57. You'd have to say that is what Boeing has its sights set on, and if it can take that out, that was also on a monthly base. That was a reversal signal. So if it can take out that $144.57, it'll set up a fairly nice A to B equals CD. If nothing more, a consolidation pattern, which is running from about the 116 to the 145 level. So we'll call it 115 to 145. We'll call that a $30 price move. So any break above 145 inside Boeing, you're probably looking at about $175 or so inside of its price move out there. Let's look at a couple things here that are moving to the downside, at least one thing that's moving to the downside. Let me see here. Percentage-wise, nothing huge percentage-wise out here. Let's take a look at Biogen, BIIB. That's off $4 and change, only down 1% out here. Monthly chart, well, that looks pretty healthy, no question about that. But let's look at the daily chart, see what's out here for Biogen. Yesterday moved slightly higher. Well, actually pulled back yesterday with 1.4 million shares. It was testing the swing point from January 21st that had 1.3 million shares out there. You tested it again here this morning and rejected that area, so it's just struggling to clear its swing point from January 21st. 390,000 shares as we speak today. And it's really also trying to get over the March 19, 2014 level. But everything looks pretty good. This has got some great support out here inside of Biogen. Had wide price spread, accelerated volume at the 323.41 level. Dow's up 5, S&P down a point, composites up by 12. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 8 points. S&P is flat. Composites up 11. Russell 2000's back 8 points as we speak right now. If we take a look at what the markets are doing, we'll go down into the intraday time frames out here. Let's go take a look at the S&P futures contract. So first, let's take a look at yesterday, what actually took place yesterday. We'll look at the 30-minute chart out here. Yesterday, as the low was being formed at between the 10:30 and 11 session, 10:30 a.m. and 11 a.m., just putting that out there. You had an A point that began back at the highs on January 23rd. That was at 2,062.50. Your B point down here was at about 6:30 in the evening on January 25th, 2025. Makes about an 80% retracement of that move. That was at about 12:30 in the morning on January 27th. Yesterday completed a 1-to-1 A to B equals CD. The price projection was 2017.75. The close was 2017.75. Intraday spike during that 30-minute session. We saw price get down to the 2013 area. So you had an A to B equals CD to the downside. If we take a look at what's going on now, I'm going to just switch over to a 10-minute chart out here. The 10-minute chart shows another A to B equals CD pattern as we are going ahead and completing this 11 a.m. Session. So around 11 o'clock yesterday was when we saw the A to B equals CD pattern begin to then actually complete and form. Here is today's A to B equals CD down pattern. It's already through the 1-to-1 level, which is 2022, 2017. You're trading at 2019. Should, in fact, be the level that it moves down to. Now, in doing so, it's going to get back on a 10-minute chart, get back to the swing point from yesterday at about the same time. 1040 to 1050 out here. That had 72,000 contracts. You've got 4 minutes left, and you've only done 37,000 contracts, and you are testing it. Let's see if you've tested the actual high. The high there was 2018.75. The low so far this morning, 2018.50. Yeah, you've tested it. So this is completed an A to B equals CD. Down pattern, it's about a 0.786 Gartley buy. If we don't see any bullish reversal signal, that, though, would say the low from yesterday, 2013.25, would be tested. And that's what's going on at the moment. On the larger picture, as we speak right now, you got the VIX index that has jumped again. It's trading that's at the high of its trading session. 1838 is the number. The key area to be watching is 1727. 1727 is this 50-day exponential moving average. And he closed above 1727, and that could be trouble, double trouble for the markets. If I come over and take a look at the summation index here for the New York Stock Exchange, so the New York Stock Exchange, first time that we've seen any kind of weakness in it. Its price oscillator right now is just slightly below the zero line out there. If this gets below the zero line, then that says, hey, now you've got everything really lined up for a move lower in the market. How much lower? That I can't tell you. What I can tell you is that on average, the market, the Dow, forms a major bottom in the year of 2015 on December 29th. And today is what, December the 28th out there. So I think we're with the guy from Sanford and Son. What was that? How he used to call out to his spouse. What was her name? Elizabeth. So the market is almost there, Elizabeth, very close to getting down towards that bottom. So, folks, it is Wonderful Wednesday. That's good news for you because our man Basil Chapman is up next. After Basil, we've got Larry Pesavento, then we've got Daryl Martin, David White, the Tom O'Brien Show from 3 to 5 out there. As always, thanks so much for joining us here at TFNN. Greatly appreciated. Have a great day, and I look forward to seeing you bright and early tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.